Hey guys, welcome back to another episode. Today we're going to take a closer look at 3 out of the 7 Max 7, Microsoft, Meta, and Nvidia. All three companies had some major updates in this past week or so. So in today's episode, I just want to do a quick recap of what happened with these three players. And if you guys do enjoy it, maybe I might take a closer look at the other 4 in the Max 7 and do another episode. So let me know in the comments below, but let's get started.
I want to thank the Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
All right, so the first one we're going to take a closer look at is Microsoft, ticker MSFT. In the past 5 days, the stock is up over 11%. They destroyed earnings. Now, some important information here. I think the first one was the one that I think got most investors excited about Microsoft. Is they made mention, and this is the CFO of Microsoft, that previously, they expected there to be a balance in the forms of demand and supply of their AI infrastructure. So when you kind of have a balance, you're starting to maybe start to see a bit of a slowdown in growth. And that's what they mentioned last quarter. But this quarter, Amy Hood said that I did talk about it in my comments. We had hoped to be in balance by the end of quarter 4. We did see some increased demand, as you saw through the quarter. So we're going to be a little short still, say a little tight as we exit the year, but are encouraged by that. Obviously, investors love to hear that, where you don't have enough infrastructure at the moment, because it means that you can keep growing and that the AI cloud computing space is still growing at strong levels. So I think this was very bullish for Microsoft. This showcases the strength of their cloud market. Now, I just want to kind of take a closer look at some charts that for Microsoft got me pretty kind of excited. The first was the overall gaming revenue. So gaming revenue was 5.7. That was up compared to a year ago where it was about 5.5. The reason that this got me a little bit excited is right now we are kind of in this space where maybe consumers, even pre-tariffs, were talking about maybe some weakness in the space. But this is a industry that the gaming market, especially with this current console, has been here for a long time already, for multiple years, and they're still seeing growth. The main reason is they're really pushing that cloud space, the Netflix of gaming, and it's doing really, really well for them. The next one is the advertisement revenue, right? And this was up year over year as well. It's down sequentially. Usually in the advertisement market, you do see a bit of a slowdown versus last quarter, but still up sequentially. It does kind of showcase that Microsoft is kind of increasing in its advertisement space. And obviously that clouding revenue continues to grow. And I mean, this quarter was another strong quarter, and I love seeing those steps in the clouding business. Now, overall, I think Microsoft is great. This is a very well-run company, in my opinion, and very diversified, right? We saw advertisement, we saw gaming, we saw clouding space, we see kind of the productivity market. So I am very excited as a Microsoft shareholder. There are some bearish takes that maybe I've talked about in other episodes that maybe not worry me a little bit, but maybe Microsoft is missing out on some growth to de-riskify itself from OpenAI. But overall, the business is run really, really well. Now, before I go anywhere, make sure to check out my free newsletter, whatthechip.com, where we take a closer look at semiconductor news, AI news, software news, and kind of really break it down to every investor. You don't have to be an engineer to understand what's happening in this tech space. Completely free. We just did some information on Amazon, on Meta, and some of the other players that reported earnings completely free. Check it out at whatthechip.com. Now, the second stock we're going to look at is Meta. So Meta Platforms, we can see in the past 5 days was up roughly 7%. Again, another company that reported strong quarter. Now, what really got me excited about Meta is they broke down their AI position into 5 opportunities. And Mark Zuckerberg mentioned, hey, look, we don't have to beat or win in all these 5 opportunities. Even if we win some, it would be a great ROI for investors. And this is why they're investing in the artificial space. The first 2 and 3, I want to say 1, 2, and 3 are really for their core products. And this is where a lot of their AI revenue, AI CapEx is going to. So first is improve advertisement. They're using AI to enhance ad targeting and performance for businesses. The second is more engaging. And enhancing recommendation systems to drive engagement across their platforms, because the longer you stay in their applications, the more ads they get to hit you. The third one, this is where they're kind of growing, but it's still really, really important to their core revenue, is business messaging. They are expanding WhatsApp, and I'm pretty sure I butchered that. I'm going to hear it all over the comments. And this is a business platform, and it's improving the messaging capabilities. They mentioned in other parts of the world outside of the United States, especially in Asia, they are seeing strong growth of business messaging, and they're trying more and more to monetize this even better. So these are their three core products, and this is when you hear Microsoft Meta increase their capital expenditure, is meant to fuel that. It's not meant to fuel Llama. They talk about it. Their generative AI solutions is still a small portion of their capital expenditure, and their kind of generative AI is like their Meta AI platform. They're also the AI devices like the Ray-Ban Meta and AI glasses. So they believe there's growth opportunity here, but they are responsible on how they're investing. And again, many investors, when they hear this massive capital expenditure, they believe that money is going to like Meta AI and AI devices, when it's actually going to those first three that are really helping it grow its overall core business. Now, here, what got pretty exciting for me, maybe not for Meta investors, but they did increase their capital expenditure by about $4 billion on the bottom end and about $7 billion on the top end, to $64 to $72 billion. And the main reason is they want to add additional data center investments to support AI efforts. And obviously, with tariffs, you are seeing an increase in cost of infrastructure. Now, the CFO did mention that the majority of capital expenditure in 2025 will continue to be directed to their core business. So again, they're not investing all this money for the Llama innovations and for all those AI pushes. They're focusing on number 1, 2, and 3, which I have here right for you. Now, some pretty cool things. They did introduce a standalone AI app. I haven't downloaded it myself. If you have used it, let me know in the comments below. But it's also going to be integrated to their AI Ray-Ban glasses, which is doing pretty popular right now. So again, in my opinion, a lot of great news about Meta, in my opinions, especially here in the United States. They did talk about maybe some hurdles that they are facing in Europe, but at the moment, a lot of tailwinds happening in other industries. Now, the final company, obviously, we can't end this episode without discussing Nvidia. Nvidia was up 2.5% on the day. For the past 5 days, the stock is up 4%. Now, what's happening here? There's two major things. First, obviously, hyperscaler, major tailwind. I mean, we saw all these big players mentioned strong demand for cloud solutions, sending Nvidia's stock price to that bullish scenario. The second thing is there are a lot, and unfortunately, a lot of policy push happening in the AI space. And CEO Jensen Huang has kind of been all over the place in the White House with U.S. governments, with U.S. committees, trying to make sure his products are going everywhere. So the first thing is Nvidia kind of discussed that Jensen Huang met with the House Foreign Affairs Committee to discuss the strategic importance of AI as a national infrastructure and the need to invest in the United States. So it's about a 3-page report. I definitely recommend you reading it. The first part is just really Nvidia showcasing that, hey, look, they are investing in building more chips and more supercomputers here domestically, which is what the current administration wants. Now, the second thing is they kind of talk a little bit that there are in an inflection point right now with AI, and you want to not limit everything. And the reason being is because when you start to limit it, competitors start to fill the gap. And they talk about Huawei. Huawei right now is filling the gap, and countries need to tread lightly, right? Because if you create this massive gap and have other competitors, then other countries eventually start to use that competition as well. They kind of talk about it, how in like the early 20s, when the telecommunication infrastructure started to be built out, Huawei was the big winner there, and it's because companies started to focus on Chinese technology. So what Nvidia is saying, we don't want that to happen. We don't want the money going to a Chinese-based company. We want the money coming into a U.S.-based company. Obviously, Nvidia wants it solely to increase its overall revenue, but they're saying that with that, if the revenue comes to us, it comes to a U.S.-based company, it comes to U.S. technology, U.S. infrastructure. It goes, obviously, Nvidia pays tons of taxes and pays a lot of other types of things to the United States government, so everybody wins. But if you start limiting them into certain regions, then that money is going to go elsewhere. It's going to create another competitor in the long term of things, and then that's going to create even more money going to another country instead of heading to the United States. So that's the overall main point that Jensen Huang and Nvidia is trying to make. I definitely see it, and the real thing is all coming between that AI diffusion role that's expected to happen on May 15th. So on May 15th, hopefully the day before or a few days before, we hear some updates about that. Now with Nvidia, we also heard how US is weighing easing Nvidia chip curbs on UAE as Trump's visits. So here we can see how strong Nvidia's products are being used, that even the United States is using that chip that doesn't belong to them, is kind of Nvidia's technology, but is using that as a trading tactic. I think that showcases how great their product is. We've also heard that, again, we've talked about the Nvidia actually has talked about even building another chip for China that is legal based on the new export bans. I personally believe that's a great move. I think they need you can't have one sole player in China, because it is going to be bad news in the next 5 to 10 years for not only Nvidia, but I do believe for the United States as well. So I think Nvidia needs to be able to have that infrastructure in other places, but that is just my own opinion. Now again, the diffusion rule is super, super important. There was some drama between Anthropic and Nvidia. I've talked about that in another video. I am shocked that Anthropic is making what I would say enemies with Nvidia. But Nvidia fired back and they said, hey, look, you guys better shut up, or they didn't say nothing like that, but that's what they should have said, right? So overall, I think Max 7 doing a lot of news. Again, I only covered Meta, Microsoft, and Nvidia. A lot happened with Apple that I want to cover with Amazon. So if you guys want me to do a video on Apple, Amazon, Tesla, and Google, I don't think too much happened with Tesla and Google, but we can definitely kind of cover them as well. Let me know in the comments below. If not, make sure to check out that free newsletter, whatthechip.happened.com. Peace out.